What's going on, guys? Welcome back to another video. Today, it's going to be the start of a new type of series I've recently thought of. Just basically trying to get you guys to train your eyes as much as possible. So it's kind of going to be like a before and after kind of vibe. So I have up some before and after pictures of a specific time on GU. This is going to be the 1 minute chart. So this is the before. We'll go through the after as well, and then we're going to go through a whole detailed markup together. Okay, but again, the idea of this new content is to just train your eyes to see where the liquidity is, what liquidity is taken, what's not, all without drawings on the chart. Okay, because it's easy to see, um, obviously, the analysis with a bunch of with a bunch of markings on, but I want you guys to be able to start seeing things without markings on. So training the eyes as much as possible. Okay. So again, this is the before picture. This is GU on the 1 minute time frame. Okay. And this is pre-news. So 8:30 on this day, we had news released on the pound, or sorry, it was on the US dollar. And obviously it would affect pairs like GU, EU, etc. So what we're going to discuss first is, again, training the eyes to see the liquidity. Okay, so first, what do we see? Well, there was a big sell-off this was in London. Looks like it was news driven. I don't remember what this was, but this is 1 minute candle, so I'm assuming this is news driven. Right at 2 a.m. So this is Frankfurt open. Massive sell-off to the downside. Now you got to think to yourself, what does this kind of move do to the average retail mindset? Okay, big momentum to the downside, big shift. Maybe it's taking out lows to the left-hand side, breaking some sort of structural points. They're going to see that as momentum to the downside. Okay, and when price retraces to these areas, these are just going to be like 15-minute order blocks or 1 hour order blocks, whatever it is. When we retrace to these areas, you're going to see reactions, right? Reactions being here, here. These areas are going to be areas where sellers are looking to take positions from. Automatically, when we get reactions from these areas, there's going to be more liquidity above this high. Now, when it comes to direction, how do I expect price to run up here? Well, if you expect the majority to be selling this, you want to wait for that build up to occur, right? You want to wait for those sell positions to happen. So these type of reactions coming out from the left hand side, you want to wait for these to happen, because what it's telling me is now we're starting to build liquidity to the upside. Okay, so we have a reason to push above this high. Okay, so first we have this news wick to the downside. We start reacting up, and you can see we start forming structure, kind of liquidity for us, right? Meaning we have a high here, low, and then we take out previous high, okay, printing this high over here. So why is this important? Since we have taken out this high, the intention behind that is now retail sees this as a bullish market condition, right? So these are going to be areas they're looking to buy from here, possibly maybe an area in here, imbalances down here. If we understand that, we know that there's going to be liquidity below, below here. So this is what we want to see. We want to see a run on this liquidity. This tells me buyers have just been trapped, and we've now created us a liquidity block. So that's what we want to see, that liquidity block form. So again, structural point, high, low, high. We see this happen. This tells me liquidity has been taken. We've now created a liquidity block, which we can take an entry off of in the future. Okay. Why it's taking this low? Why is this also important? It's important because now sellers see this as a shift in structure, and they're like, hey, cool, now it's time to continue back to the downside. All right, so they're going to be looking to sell here. All right, back up at the highs. So they want to see that return back to their premium, a premium price point, and they want to be entering sells here. Okay, look how we take out some lows. Maybe they're adding more sells over here. These are all going to be trapped. Again, look at this false reaction to the downside. All of this is to induce sellers to be selling in these areas. Okay, we do not want to be getting involved in this price action. Okay, so we want to see price now approach, a run above this high. Above this high. Okay, so as you can see, we end up approaching, so we get slow, sluggish price action here, all done on purpose. We eventually run this high. Okay, now before we took out this high, like we were just talking about, what did we do? We created this buildup of buyers here. You can see there's a trend line Structurally speaking, again, look how we had this high taken out, price returned back to this area, moved away. So we've now left all of this liquidity here. The market returns back to this area. And what does it do? It actually just respects it. Look how this area respects this, basically just respects liquidity, respects retail. So now, since it's respected it, moved away, we can now draw this as a liquidity point, okay? In coincidence, look what we have right below. Okay, so now it's starting to make more sense. Then we go long and take out this high. Now, don't forget, we have news at 8:30, and I always preach to you guys, do not be taking trades before news events, because what happens is you're simply going to be trading with liquidity, okay? You have to remember the market will most likely, not all the time, most likely it will be building liquidity for the news event, okay? So the occurrence at 8:30. So what you want to see is you want to wait for 8:30 to drop, which is right there. See what it does. Mark out these areas. So we have this high we're interested in, okay? Because why? We can see this getting taken out. We've now built liquidity out of here, here, respecting this area to the left-hand side, okay? So if we get maybe some sort of a spike up and we respect the high to the left here, and then just continue off to the downside, what is this going to provide us? We've yet to take out this high. Remember, this is like our destination. This is the target we have in mind. We know sellers are interested in getting in positions up here. So there's going to be lots of liquidity above this high. We want to be buying into that. Okay. Now, don't forget we've marked out this low down here. Okay. We want to see these lows taken out because this is where the buildup of buyers is now. And then again, coincidence, we have a liquidity block sitting right below. So we want to see a run on this liquidity down here. And then we can anticipate a reaction in this area because this is a liquidity block. There is no liquidity down here right now. So we can anticipate reactions out of here. Okay, so this is the before. Now we can, let me see how I can erase all this. Or maybe if I just go to the next picture, let me see. There we go. Cool. So now this is the after. Let's get the markings back out. So like we were talking about this high, if we mark this and drag it over, if it will let me. So news, what ends up happening? This was the news drop right here, this big wick. It respects the high to the left-hand side. Okay, just induces more sellers into the market. Coincidence, the the buildup that we had pre-news ended up getting taken. Look at the liquidity block. We end up respecting. Oops. Liquidity block we end up respecting here. We respected all this area. Perfect. Just like we anticipated. We move away. Since we have taken out this low and this low, even this low over here, this is now looked at as a whole trap. We do not sell from that, okay? We can anticipate reactions to occur because this is, again, where sellers are interested in getting in the market. If we do get reactions, it's just going to provide us what? More opportunities to buy, okay? So this is the after now. Now we're going to head over to the trading view chart and take a look at the detailed markup, okay? So step by step. Again, we take out this high. We move higher, print this high here, taking out the previous. Retail seeing this as BOS in the market, okay? Then we get that rapid sell-off to trap the buyers, leaving us that liquidity block. That's what we want to see, okay? Since we've taken this low out, BOS to the downside. We get price all the way back up to the extreme. This is a trap. Retail is interested in selling this. We do not sell from there, okay? Then we move higher, taking out highs, all right? Trapping the sellers. Anybody looking to take positions here, they are trapped. Cool. Now we're approaching more areas over here. Okay, all of this reactions, all trap. You can see I just marked out the extreme up here. But then again, sellers taking positions up here, off areas to the left-hand side, seeing this as their momentum to the downside, right? They want to see price react here and continue off to the downside. Reaction to, and then we get a little sell-off. We can get a little minor BOS, but we don't take the liquidity, okay? Why is this little BOS important? Well, it just induces sellers again. Look what happens. Price returns back to the highs, and we get false reaction here to the downside. This is sellers looking to take selling positions just to get them trapped. Again, finally, news gets released. Big spike up, but what does it fail to do? It fails to take out that target. Okay, this is still, again, sellers looking to enter this thing, leaving us liquidity to target above this high. Then we get a rapid sell-off from news, clearing this whole buildup we had pre-news. Okay, again, remember that pre-news. This was done on purpose, it was waiting for time to come into effect. 8:30 drops, news comes out, grabs all this internal, traps all those buyers. Now that all the buyers are shaken out, we get mitigation of liquidity block to the left. Perfect. That's what we want to see. This is screaming buys. Okay? Screaming buys. Now that we've taken out these lows here, 1, 2, 3, 4, just like we were talking about the other pictures, this is now going to become what? A trap. Same thing over and over. We get a false reaction at the highs, just building more liquidity up here. False reaction. Takes out this low. Retail sees that as what again? BOS. A coincidence. We approach the highs, and look how we screw around for a bit, right? We stay up here for about 45 minutes, inducing sellers to sell in these areas over here, okay? Same thing happens. Look how we get that little BOS to the upside. Price returns to this trap area. It screws around for like a good half an hour, building liquidity where? Below here. And then coincidence, what do we have right below liquidity? Boom, liquidity block. So it was building liquidity all on purpose for it to just get taken out. We tap the imbalance, tap the liquidity block to the left. Perfect. And we get a move back to the upside. This is BOS for retail. So this, I didn't mark yet, but also a trap. We do not sell from that. Let's just say, hypothetically speaking, we get reactions here. Price comes up to the high, and we get false reaction. This should just be false and just continuation up. Okay. Obviously, this reaction didn't occur, but you can anticipate these things to happen. And then finally, from A to B, target is finally met. Sellers trapped above that high. Clear and clean. Hope you guys enjoyed this new type of content style. Let me know what you guys think in the Discord. Yeah, we'll talk soon.